following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 7th fantastic Friday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have a fantastic and fabulous week. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go look at the circumstances of what the bulls and bears are communicating to you and I. I'm absolutely grateful for your presence here, and I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is fabulous and fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 129 points. She's trading at 17,290. S&P off 14 at 2,069. NASDAQ Composite down 43 points, trading at 5,013. Russell's off 12 points, trading at 1,203. The DAX closed down 94 points. The FTSE down 28. Gold's up about $4, trading at 1090, about 1094. Silver's up 16 pennies. She's trading at 1484. Light sweet crude back 64 cents right now, trading at $44, almost even Steven. To the upside, dollar-wise, lead the charge. It is stamps.com, up nearly $19, 28%. New Skin Enterprises up 21%. That's up about $8. Mohawk Industries up 4%, up $7.60. You've got Lending Tree up $6. Harmon International up $5. To the downside, Priceline off $24. We'll take a look at that. No island reversal or anything there. Bluebird Biotech getting hammered, down 15% off $24. I don't think Alan, I can't really pronounce that. Alnylam? Yeah, I guess Alnylam Pharmaceuticals, that's off 18%, down $22. Just had to read it. Anacor Pharmaceuticals off about $14 as well. So where do we begin? I think let's begin by taking a look at, let's just walk through, I know where I want to lead us to, which is really taking a look at the Dow. Well, let's just do that. What's the reason that we want to do that? Why do we want to take a look at the Dow? If we flip over and take a look at our price oscillators summation index for the New York Stock Exchange, NASDAQ Composite, and Dow, we know that yesterday, prior to yesterday, the day before, we saw a close in the price oscillator all below zero. That gave the advantage to the sellers out there. Maybe it was yesterday when the close. It was the night before. So yesterday we saw the market move down. We're seeing that further, obviously. But if we take a look at the New York Stock Exchange, we still have a rising price oscillator here. So the damage with regard to net declining issues out here, it has not been too bad. Really not been too bad at all. If we take a look at the NASDAQ Composite, you're going to see a similar pattern. But the NASDAQ Composite, its message was on August 5th when the price oscillator got above zero. And the very next day, yesterday, it came down below that. It really said that buyers never, ever had control inside of the NASDAQ Composite. We're seeing it obviously make new lows by getting underneath the swing point here from July 28th. So we'll go take a look at the Qs and volume. But we still have, at this stage here, a rising price oscillator. Whereas inside the Dow, now the reason why I'm paying attention to that is because when we take a look at the Dow, it's totally different. In the case of the Dow out here, and we'll go look at the diamond. So let's look at it daily, weekly, and then let's go look at the components inside of the Dow. Because what you can take notice of is what's taken place here over the past couple of days is the Dow has made it into that extreme oversold condition. The last time that we were down here was back on July 27. We saw saw 2-day bounce and then 2 days sideways move out here. We saw now if we really get down to the last time that we were in this type of oversold condition, you'd really have to come all the way back to the March 10th time frame. And what happened in the ensuing days? We saw the market bounce out there. If we come back a little bit further, same type of setup back in January in 2015, January 14th, January 15th. So we're now down at those levels where we need to pay attention and focus on. Really, I think it's the Dow that's going to give us our most important message here, because it's been the one that has been down the quickest to that oversold. But we need to see what's going on, certainly volume-wise, and then we can take a look at A to B equals CD patterns, other things that are out there. In the case of the Dow, it is trading back into the February 2nd swing point out there. Inside the Dow, that ranges from 17,037 to 17,367. So this is the area that I believe we want to begin to focus on first. So now that we know that element and just looking for clues inside the market, let's go take a look at the ETF structure, and let's go take a look at the daily chart for the Dow Diamonds, figure out what it's doing. As we take a look at it, there's really a couple things that you can pay attention to on my screen out here. And actually, I would have to say that with regard to market profiles, those are going to be the horizontal green and blue lines going across my screen. We could pretty much ignore them at this stage, other than to know that price is below any type of weekly or daily market profile out there. What does that mean? That means it's kind of like you're driving down the expressway, you get caught in some traffic, and once you get through that traffic, you can floor it as fast as you possibly want to. That's why you and I, because the Dow has the ability to floor it. So let's go take a look and see what does that actually mean? What does it really mean component wise? All right, because we've got a weighted structure, and we'll take a look at it from top to the bottom. We may just simply do the entire Dow just to get a feel for what's going on. But on a daily basis right now, the Dow Diamonds have done 3.5 million shares, and they are trading into where it last broke out. There was a gap up on the trading day of February 3rd. On February 2nd out here, the Dow Diamonds did volume of 9.4 million shares. 9.4 million shares, and you are in it right now. We're 3 hours and 45 minutes into the trading session. And guess what? It's pulling back into that swing point with light volume. Now, here's the issue with regard to the Dow. You close anywhere underneath 173.43. That says, even if it's on light volume, that the real test doesn't come until you get down. Either you got to explode out of there and reject it, which you wouldn't do if it closed inside it, or you have to wait for price to go test that low. So wide open out here for a test. We know that it's coming back on light volume on the daily basis out here. I mean, anything can happen in the next couple of hours, but as we speak right now, 115, it's light volume inside the diamonds. But that still opens up the door to go ahead and test that low of 170.10. The other thing we could take a look at as far as an A to B equals CD pattern out here, I take a look at the the larger one, that hammer candle from July 7th. That had volume of 7 million shares. Let me put this up here like that, easier for you to see. 7.7 million shares, and we know that we're passing that with what looks like light volume, 3.5 million shares today. So you've got an A to B equals CD. If we take a look at what that might be, well, I'd probably have to put the tool on here. I'll do it on a different screen out there. But I could just visually tell you, it's going to take you right down into that swing point here from February 2nd. So we already know we're dealing with that low out there. But you don't have a confirmed A to B equals CD to the downside. If we take a look at even the swing from July 27, maybe we did that 5.3 million shares, that one is possible. So a near-term swing, it's possible that it's taking that out with some volume out there. But still coming into that swing of February 2nd on the daily, we know it's light volume. Okay, I think I've stated that enough for you. Let's take a look at the weekly chart for the Dow Diamonds. Let's go. Here's an A to B equals CD already drawn out there. Perfect. So now let's take a look at the weekly chart. Now, what the weekly chart shows us, let's do this here. I'm going to just clean this chart up just a bit. And this way we can turn some things on. We can turn some things off. Let's turn that off. Let's turn that off. Let's turn that off. Okay, perfect. So now with regard to the Dow Diamonds, this is a weekly chart. So if we go back all the way to 2009, you're going to see that I've drawn two trend lines in here. One from March of 2009, and the next touch point on it is going to be that major low back in October of 2011. Then what I'm doing is I'm taking a trend line off of that October 2011 time frame, and that happens to run right into the lows in November 2012, as well as that October 2014 area. Now, what we're seeing is that on a weekly basis is where price is sitting at right now. It's right on that trend line. If we saw some kind of significant break of this area, if we do see a significant break of this area here, what that says is when you break one trend, you're going to go to, because we're using trend lines here to help identify support or resistance. In this case here, clearly it's support. And if you break one trend, and if, let's say, it comes back up, tries to test it, get back in, and can't, says you're going to fall down to the next trend. That's the trend coming off of the March 2009 area. So we know that that's one of the patterns that's out there. If we take a look at that A to B equals CD pattern that's already in here, you can see you're pretty much completing on the larger basis. This is in the weekly chart for the diamonds. The actual price projection would be 172.34. That would be your 1-to-1. The actual low so far, 172.84. So 50 cents more. Maybe we see 50 cents more. That'd be a big push in the Dow Diamonds today. But that would complete a 1-to-1. So you're up against support. On the weekly basis, let's look at volume. And the weekly basis, what we would be dealing with out here, let me see if I put this on the screen for you. We're dealing with the swing point from the week that began February 2nd. And that has volume of 36 million shares. And we're nowhere near that. You're at 22 million shares for the week. So we know that the Dow Diamonds are coming down on light volume on a daily basis. We know that it's also clearly now coming down on volume on a weekly basis. We know that in both cases, it looks like it's going to close inside there. That says you can go test the bottom until you've cleared it, at least on a daily basis. That's what you're likely to do. But you're also up against support, and you've passed a B point. Let's see, here's a B point of an A to B on a weekly basis. That is 27 million. You're at 22 million. There's no way. Like, I can't say guarantee you, but the Dow Diamonds basically do about 5 million shares a day. We're already 3.5 hours, in essence, trading in under our belt out here. So it's not even going to pass the swing point with volume on a weekly basis inside of the Dow Diamond. So it's up against pretty good support. We took a look at the summation index, which says you're down to overbought territories, where in the past we have at least seen a bounce, if not a bounce, a bottom out there. And that's so far the message of taking a look at the ETF structure. So now what we really need to do out here to put this piece of the puzzle together, obviously it must mean that the components are going to show the same thing. Or are they? I don't know. Let's go take a look at the Dow. Let's at least begin taking a look at maybe like the top 10 out here. And if we take a look at the top 10 simply from a weighting structure, you've got Goldman Sachs as the #1 weighted stock inside of the Dow. You've got IBM #2, 3M, Boeing, United Health, Home Depot, Apple, Nike, Disney, and Travelers, I believe, rounds out the top 10. So let's just simply go see what the top 10. So from a weighting standpoint, right, if these guys are pushing into swings and other areas with volume, then maybe that just shoots a hole in the conclusion thus far that the ETFs are helping us draw. Now, in the case of Goldman Sachs, I've got a daily chart up on my screen. What's under attack right now inside of Goldman Sachs happens to be the swing point from the trading day of July 6th. And that swing point has volume of 2.8 million shares. You want to talk about light volume? Oh, wait a minute. It had 3.3 million shares. My cursor moved. So 3.3 million. Goldman Sachs, from a daily perspective, is doing 818,000 shares. Now, not that it can't close below that, but it certainly is not blowing away a swing point here with volume, and that's the #1 weighted component inside of the Dow. Nonetheless, you close below 203.20. What's that open up the door for? It probably opens up the door, not for much, because you've got this little high volume high. It was at one point in time. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went into that break, we began looking at the components of the Dow. Now, we're just going to take a look at, well, we're going to take a look at actually 11 of them. But we're going to look at the top 10. Now, the reason that we're looking at the top 10 is, which is goes from Goldman Sachs all the way into Travelers. The top 10 stocks, weighting stocks inside the Dow represent 51.3% of the entire weighting. So we've started with Goldman Sachs. We know that Goldman Sachs is trading right now below a swing point with light volume, and it should have really good support here. If it doesn't, Goldman Sachs will go ahead and try to make a move down to 197.95, but it certainly is not blowing away any kind of swing points with volume or anything along those lines. Number 2 up is IBM. And in the case of IBM, by the way, Goldman Sachs was a weighting structure of nearly 8%, 7.8%. In the case of IBM, its weighting structure right now is 6% out here. Now, in the case of IBM, it's trading back into a swing point from March the 13th. That swing's got a little over 6 million shares. You're into it today with 1.9 million shares. So you've got IBM pulling back and testing this swing point with light volume. Likely, it'll go test the 153.40 area. Until it tests that, we really don't have enough information to know if that's going to hold, but it is inside a swing point with light volume. If you take a look at the If you take a look at the volume from yesterday, it was 3 million shares. So you're really inside that swing on very light volume. This is adding to the anticipation expectation that we're going to see a bounce inside of the Dow. At least the top two stock charts are telling us that. Let's take a look at 3M. In the case of 3M, it's trading into a swing point from the day of July 27. That swing point has 3.1 million shares, and you're in it with 878,000 shares. Now, the bottom has not been tested there either. So in all three, well, at least in the last two stock charts, IBM and now 3M, because you're trading inside a swing point, says, hey, you know what, Monday you go down and you test that, you reject it, and that sets up when the bounce could take place. But at least that's the test. So Goldman Sachs, you're moving in with light volume. Here in IBM and 3M, you're coming into a swing point with light volume as well, but you still haven't tested the bottom of that. If we take a look at Boeing, Boeing is number 4. Boeing represents 5.5%. Now, in the case of Boeing, it also is trading into its most recent swing point, which is July 28th, and that's got volume of 4.1 million shares, and you're into it today with 1.2. Really clear message here when we start taking a look at the components of the Dow. United Healthcare, that represents us number 5, 4.6% out here. And in the case of United Health, I'm going to be struggling to try to tell you exactly where this thing is trading to. There's really nothing bad about United Health. The pullback today, 1.2 million shares. Yesterday, it did 3 million shares out here, trading into 5.2 from the trading day of July 28th out there. So there's nothing broken here in the fifth weighted stock inside of the Dow. If we take a look at Home Depot, Home Depot's number 6, 4.4%. This almost looks like United Health stock chart out here. Volume today, 1.8 million shares. Yesterday, you did 4.7, so even lighter volume. Today on the pullback, I would be struggling to tell you that this thing is falling apart. So it's not giving us any signal that it wants to take off to the downside. That's Home Depot. Apple. Now, Apple, obviously, we know they've got their issues and their problems, 4.4% inside of the Dow. But what we know about Apple is that during the week, it tested a breakout level, and it did it with light volume. See, Apple came back to the gap, and a gap is your friend out here. There was a gap up on the trading day of January 28th. That was with 146 million shares. And even in all the hubbubaloo out there, that came back with only 99 million shares, 99 going against 146. That's like, missing volume of 1/3. So it came back on only 2/3 of the volume into that swing. Now, look, I'm not suggesting you go run out and buy Apple out here. It's got that island reversal top out there, but it is set up for it to at least bounce out here because it's come back and it's tested an area on light volume. That's Apple. If we take a look at Nike out here, Nike is number 8, 4%. If we try to find something wrong with Nike out here, I'm not seeing it visually. This looks like a pretty darn good chart to me. Let's go take a look at Disney. Now, we know Disney struggled a couple of days ago. So what's Disney trading into? Where's the problem here in Disney? The problem in Disney is that this can easily get down to 98.82. Now, it's not going to do it overnight, but pretty good chance that is where Disney is headed to, which is into its original sign of strength out there. Let's finish this up with Travelers. We've got about 10 seconds or so to do that, and then we will have been through the top 10. And as we take a look at Travelers, no problem. Now, interestingly enough, one stock is to the upside today, and it's Caterpillar. Go take a look at your Caterpillar chart and tell me if you can find a bullish pattern, a very, very, very bullish pattern. I take that back. American Express is up as well. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. When we were doing the review of the top 10, the Casey Kasem top 10 of the Dow out there, there was only one stock that was in the green. That's why when I looked back to my screen, I was like, oh, no, there's 2. But that second one is American Express. If you're watching this on Tiger TV, something is going on with regard to American Express, because we're looking at 10-minute bars. And in the last 10 minutes, you can see huge volume, huge upside spike inside of American Express. So just to give you an idea, volume-wise, the first 10-minute bar, and I'm not sure when it started during that session, but let me see. Let me pull this out here so I can tell you what the volume was. Volume on that 10-minute bar was 1.5 million shares. The stock went from 74.34. It's trading at $77 right now. It's a pretty big move. And this bar has actually more volume, 1.8 million shares. We'll switch back to the daily chart out here. and I do not, I searched, I don't know what the news is, but you want to talk about key reversal sessions inside of American Express. Boy, you've got that today, that's for sure. Now, the question is going to be, in the case of American Express, it's got some real damage that has been done to the chart out here. So, again, I don't know what the news is, but what I can tell you is some areas that it's going to have some hurdles that it has to get over. And if it can get over those hurdles, in fact, in this case here, let me go ahead and also turn on my market profiles just to see where we're at. So what's interesting on this is just going to show me the daily here. So you can see it's really run into the top of its box, which is resistance at 77.50. So if American Express closes above 77.50, it really just has two more hurdles that it needs to be able to cross, which is 77.95 and 79.35. Both of those are gaps to the downside. There is another gap out there that it'll have to deal with, but that's all the way up at about 83 bucks. So that's a while from now. Well, maybe not before it has to deal with that, but something certainly going on inside of Amex out there. Now, the one stock, and I said, hey, can you identify for me the most bullish pattern? Because a lot of people would say, hey, cat is dead out there. And if you take a look at it, it actually has the most bullish pattern that you can find for a bottom out here, and that's an island bottom. You really have to be paying close attention. Now, remember, the most bullish pattern can also turn into the most bearish pattern if it ever gets taken out. So if the market's going to crater right here, and if you see a close below that, then you can say that there's some real problems. There have been problems in Paradise, but now it's got some real problems out here. So you've got an island bottom inside. And you might say, what is an island bottom? If you take a look at the trading day, let's make sure that I got this right here. If you take a look at the trading day of July 24th, the low is 75.85. The very next, and a gap down the next day. So 75.85 is a number. The high of the next session is 75.72. See, we've got a gap there of, 13 pennies? The very next trading session, now you're going to go benchmark 75.72 against the low of the next day, 75.79. So you got 7 pennies out there. So you actually, and then you had a nice little follow through. You had some volume on that gap up on July 28th. It's really critical for Caterpillar to hold that low of 74.77. Now, it's got some work cut out for it, trying to bounce up to 80.10, but that certainly is in play for it to do. It's also completed an A to B equals CD to the downside with, the most bullish pattern that really you can get out here. So, remind me from time to time. We'll come back and take a look at Caterpillar, but it has one of the most bullish patterns. So, look, if you were in this stock and you have ridden it down, and when I talk about riding it down from the roller coaster, you're talking about 111 bucks down to where you're trading at in the 70s right now. That's a pretty big ride. If you were thinking of throwing it out, don't throw it out until you see it close below that island bottom, which is a price. I'm not saying you're going to see that, but it would be a price of 74.77 out there. That would not be a good thing for Caterpillar. So there we took a look at the top 10 holdings inside of the Dow, just to go. And so we should be able to anticipate at this stage here that message with regard to the summation index, which has gotten to that extreme oversold level. We can see it's backed off since here. Maybe, we see that on Monday, but it's really, the Dow is getting to a stage here where it's not really confirming what it is that we're seeing with regard to the price erosion here, at least when we take a look at price and volume out there. So that takes care of that. We didn't take a look at any of the other ETF structures. We might as well do that too. Let's go take a look at, let's look at the daily and the weekly. Let's take a look at the Qs. Let's go, because, I really think that the Qs are also going to give us an important message. Now, the Qs right now are dealing with a swing point with the July 28th is the number. Now, price there is 109.79. You're trading at 109.61. The volume on that session on a daily basis, you got to look in the upper left-hand portion of my screen right now to see that, and that is 33.5 million. There's not a chance. You're at 17.9 million shares today. So the Qs are busting to the downside on light volume, at least on the daily chart. Now, the key price point inside the QQQ ETF is going to be 109.79. If it manages to close above that, you'll have a rejection of a swing point, both on price and volume. If it closes below that, it continues to open up the door, maybe to get down to 109.10 or so out there. That's what's going on the daily chart. On the weekly chart for the Qs, let's switch back over. What is it? It's not even anywhere near. And you'll see a series of trend lines out here. When we take a look at the Qs, it's not anywhere near any of those trend lines out here. Now, if price continues to fall, it'll fall to that first trend line, which also happens to right now coincide with our top of our weekly box inside our TAS market profiles, right in the 105.55 level out here. Volume-wise for the week, 136 million shares going against that breakout from July 13th of 142 million shares. So it's going to have the volume as it's coming down into that area. It's just trading inside there. We've really had just kind of a... And the volume back on July 6th is 163. It has not touched that swing. So, but it's going into that swing at this stage of the game so far with some light volume. It's not going to do 30 million shares. Actually, if it's already done 17, it'll be lucky to do another maybe 10 or so, 10, 12. So volume-wise, again, you got 142 against 130. Yeah, you're going to have – it's coming into that week of July 13th, that began July 13th, with similar type volume, maybe a little bit more out there, but nothing that is outrageous. Russell 2000, we go take a look at the IWM. What is it doing? Well, we'll start with the weekly. We'll go back and take a look at the daily. It's dealing with a swing point out here from the week of July 27th. Now, that swing has volume of 182 million shares. You've done 145. So you're now getting a test. At this stage of the game, you're getting a rejection of a swing point on a weekly basis inside the IWM. It's done 145. It's not going to do 40 million shares in the next 2.5 hours. So any close above 119.34, and you'll have a rejection of the IWM of a swing point on light volume. If we take a look at the daily, let's go see what the makeup is of the daily for the IWM. IWM trading inside this descending price channel. It's dealing with the hammer candle out here. That hammer candle was from the trading session of July 28th, which had volume of 53 million shares. Yeah, so the daily and the weekly, if you do get a close above 119.34, you're going to have a rejection across the board on those two time frames of the IWM. And that will have held as support. Let's go finish this off and take a look at the SPYs out here. Let's do the daily first, see what the SPYs are doing. They're trading into a couple of different things. They're trading into, first, they're trading into that hammer candle from July 7th, which had 173 million shares. You're in that with 64. So, you know, it's not even close with regard to volume from that standpoint, but you're underneath the top of that bar, which is 208.17. The second swing point that it's trading into, the most recent one, is July 27. And that's not even close there from a volume perspective. 132 million shares on July 27th, and you've done 64 million here. So the SPYs are nothing but light volume out here. So you got the Dow and the diamonds, which, you know, let's assume it's going to go ahead and still push lower by the end of the trading session coming into the 4 o'clock time frame. What you and I know, at least at this stage of the game, if that were to occur, it's getting down towards that oversold level. And when you take a look at the top 10 components, doing it with some light volume out there. If we take a look at the weekly chart, let's do that just to finish this view out here. The weekly chart for the SPYs, let's go see what kind of volume configuration we can find out there. Where's my, here we go, the lower left. If we take a look at it, it is actually testing a swing point. So it's trading into the weekly swing point that began July the 6th. Now, July the 6th, that week, we probably, I don't remember, was the holiday? The holiday was on a Friday, was it not? Yeah, so this is not even a holiday other than it's summertime. That has 729 million shares, and you're into that with 462 million shares. So the message to me, if you want to take a look at just simply volume on the weekly and on the daily out here, is there's not enough to bust things down, not just yet. So we're still in that sideways consolidation, choppy market out here that we've been in for a while that can aggravate both bulls and bears out there. If we were to get some volume to the upside inside the SPYs, it'll run down to that first trend line out there, which would take you down into about the 204 area, 204.11 to be exact. So that takes care of the ETFs. Let's go see what else it is that we can look at. Let's go take a look at Goldilocks out here. If we take a look at gold, that's up $3, 1093.50 is what it's trading at out here. Again, just being quiet as can be, not wanting anybody to know, not wanting to be anybody not wanting to let anybody know that it's really trying to muster up the courage to take on the 1180 area out there. Now, I will tell you one thing. If you're a person that is bottom fishing and is looking at the complex, there are 2 or 3 equities based on what they did today. There's 2 for sure that I have my eye on. There's 2 that if gold were to somehow Sunday night, Monday morning, were to move higher, were to start to tackle that 11180 area, there's 2 individual mining equities that would likely go ahead and form an island bottom reversal out there. And I would suggest that those would be the 2 that you want to keep an eye on out there. Well, newsletter subscribers will know what those 2 are, but you ought to go through all those stocks and see if you can find it. That is the clue that I will go ahead and give to you. If you take a look at Hi-Ho Silver out here, that's up 15 cents, trading at $14.82 out here. Volume so far today in the contract looks like 32,000 contracts, still just hugging the lows out here, dealing with that swing point from back on December the 1st. We'll have the COT, commitment of traders data, out at about 3:30 today, but they have positioned themselves, believing, taking the positions both in gold and silver, that it's forming a bottom out there. Light sweet crude, that's trading down 52 cents at 44 bucks and change. What is it doing? We've got the looks like the September contract out here, best as I can tell. If we take a look at a expansion of swing points out here, that what it is trying to do is it's trying to make a run to the 1.618 expansion. It looks like we've got $40.57 or so written all over it, and that is the case for Texas Tea. Let's take at what do we want to take, like currency wise? Not much going on in the euro, Japanese yen, so she's been relatively quiet and not wanting to show its hand. The euro versus the US dollar, it's been relatively quiet as well. It's been testing today. It tested the swing point again of July 20th. It has rejected that area. If it gets below there, which is $1.08, then you're setting up an A to B equals CD to the downside. If we look at, what do we want to look at next here? We took a look at the Dow pretty thoroughly. What we didn't do is take a look at. Let's look at this. Let's go under the covers of the SPY. Let's go take a look at the #1 sector, the XLK. Let's see if there's any kind of message out here inside of the XLK. So what is it doing today? Well, clearly it's testing the swing point on a daily basis from July 28th, which has volume of 7.8 million shares. You're testing it with 3.8 million shares. If you close above 41.87, you've got a rejection on price and volume on a daily basis inside of the #1 sector, inside of the S&P 500. If you take a look at sector #2, I believe it's sector #2. I'd have to go back and look at that. It's another sector #2 or 3, that much I know. And that is the financial sector. What is the financial sector doing today? Again, it's a daily chart that we're looking at. It's tested the top of the swing point from July 27, 28 million shares there. It's done it with 13 million shares. Could there possibly be a more clear message that there is not enough juice and energy to go bust out those lows out here, and that we're back still and have been and continue to be inside this sideways trading range out there? Now, let's look at the XLV, the healthcare sector out here, and that would round out the top 3, and that is trading inside the swing point from July 27, which has volume of 11 million shares, and you're inside that with light volume. Man, it's across the board out here. Now, it's still trading into that swing point of 74.93. Didn't test the low of 74.39. It needs to, from a rejection standpoint, close above 74.93 out there. Volume-wise, that configuration, by the way, if I didn't mention it, 11 million versus you're at 6.6 million shares today, and that is inside the XLV. Let's round this out and do one more. How about this one? Was it the XO? No, it's the XLP, I think it was. What a day yesterday. Now, this thing has been on fire, but it actually had a key reversal session yesterday. So that may be it for the consumer staples area. That's, it needs to now clear the high of yesterday in order to resume back to its bullish mode, which was $50.94. Now, look, light volume today on its pullback, 3.8 million shares. It doesn't look broken, that's for sure, but it did give you a pretty significant reversal session yesterday. Dow's off 96, S&P down 12, composite up 38 points. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. I saw an email during the break there that was asking me about Caterpillar and whether or not it was a buy at the $75 gap out here. Now, see, the key is that that's an island bottom, and ideally, if this is truly going to be a bullish pattern, you won't see this equity pull back to the 75, 72 area out there. That's if it truly has that what's associated with that island bottom. We've taken a look at the island top inside of Apple, which it's done 6 or 7 of them throughout its history out there. Nonetheless, that's significant resistance. So now what it needs to do, I went back and took a look at a weekly chart. just based on the email coming in, just to take a look at it a little bit further. And on the weekly chart, what you can see, I've drawn a yellow line across the top of the swing point here, which takes you back into 2011, the week that began October 3rd, 2011. And the price there is 77.79. Now, it has been tested, that swing point, with light volume. When I say light volume, I'm referring to 65 million shares. You've been down with 42 million shares 2 weeks ago. Last week, 53 million shares. And this week, you're at 26 million shares. So it doesn't have enough energy to try to go bust it down. Nonetheless, you really want to see it close above 77.79. You're at 77.53 in order to give you that all clear signal out there. I only wish that, and like this can certainly trade in the opposite direction of the market. My belief is that what the market's communicating to you and I is that we're still inside this consolidation. There's going to be another run higher that's going to get people feeling good again, because, if you take a look at the investor sentiment survey out there, they're as bearish as they have been in basically in the last 2 years out here. And if you go look at the other times just over the last 2 years when they've been this bearish out here, it's formed bottoms. Is it going to do it this time again? And I don't see any reason not to. We just took a look spent a show looking at one of the worst performing indices, the Dow, and took a look at what was going on volume there. And then we took a look at the other ETFs, daily and weekly, at least as of 1:45 or 1:30 in the afternoon today. In the case, about my thoughts there is that you're going to see the market move higher. Is it going to take out the highs? That I don't know. Probably not. But it's going to move higher enough so that it gets people to the other side of the trade, and that's when things really are likely to start in earnest to the downside. Of course, I don't have an RSVP. So, we just have to use a set of tools, technical tools, which I think are the most fundamental aspect of taking a look at what's going on when we look at any stock chart out here. So to sum it up, if we take a look at the VIX index, haven't done that. It's trading above the 50-day exponential moving average. That is good for the bears. It's trading at 1439. The 50-day is 1390. He closed back around that 1390 area before the end of the day out there, and that says, it's actually buyers that would have the upper hand. And what it really says, it says more than anything else that there's plenty of liquidity. Not so much buyers or sellers, just simply a great liquidity gauge. When liquidity dries up, that's when you see prices move to the downside. And we don't see that liquidity as an issue inside the euro-Japanese yen. Anything else to focus on? New York Stock Exchange. If this was as of before we came on the air out here, what I can tell you is there's still that divergence, that bottom forming divergence, where you've got a rising bottom in the advanced decline line inside of the NYSE, and compared to the Dow, you've got obviously a lower Dow out here. Until the bulls show up, and they will show up and give us a reversal signal. Until that, it is just simply a potential pattern to be watching for. So, folks, stay tuned. After this show, we've got, I believe, David White is in the seat again. So stay tuned for that huggably, squeezably soft David White, then the Tom O'Brien Show from 3 to 5. Have a fantastic weekend, and I'll look forward to seeing you Monday afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.